Hello everyone. As we all know, it takes two to tango, and on markets, the one leading can easily change. If we look at the example of Spain, let's start with some facts. On January the 13th, Spain issued its first 2021 syndicated bond, a 10-year maturity with a target of 10 billion euros. Market appetite was ravenous and order book quickly reached 130 billion euros. And then all of a sudden, order books dropped by 75 billion to reach 55 billion euros. So what happened? Well, given the market appetite, Spain set final conditions at a lower level, a decision that was not welcomed by all investors. And still, all in all, demand was of 55 billion euros for a 10 billion issue, so that remains quite successful. But compared to order books of 130 billion, that's a big gap. So what does this story teach us? Momentum in primary market remains solid. We're still talking of a 55 billion order book. Yields remain low or even negative, so new issues with their issue premiums is one of the last opportunity to get some additional basis points. But it now seems there's a limit that some investors are not ready to cross anymore. Because for deals to happen, balance is key, and it means that both parts, the issuer and the investors, have to be satisfied. Current market conditions are with no doubt in favor of issuers, but with this bond, the balance was not there for some investors. The deal was too cheap in the beginning and became too expensive in the end. Cutting price guidance is usual, so are the withdrawal of orders. But such a drop in order book had never been seen before. The Spanish Treasury went from a premium of 8 basis points to 4 basis points above the existing 2030 Spanish bond, and this represents for the issuer a yearly saving of interest of 4 million euros. So book fell by a record, but still the bond was 5.5 times oversubscribed. As a reminder, not even a year ago, when countries were offering premiums to attract investors in the rising COVID environment, Spain paid a premium of 17 basis points, which is 4 times more. So what to remember from that story? Premiums on Spanish bonds are back to pre-COVID level. Some investors will not go beyond a certain limit anymore. But given that more than $17,000 billion of debt are in negative territory, and given the ECB ready to support market, Spain and the other peripheral countries will continue to be successful with investors hunting for yields. But the tango leader will probably alternate more this year than it did last year. Thank you.